And you mentioned competitive market. The last 4 or 5 years, there was so much capital in the world that they funded millions of startups. As an example, I'm originally from Mexico and Mexico City. There's over 150 fintechs in Mexico City. So it's really competitive out there. There was so much money. There's too many companies trying to serve the same market. So how do you compete in a very competitive market? Like if you're in a very competitive market, what you should do as a team to differentiate yourself and really be able to win?
So in that particular example you just gave of 150 unique companies in fintech that you know of, right? There's probably more, but let's call it 150, right? Then you say, you know what? I'm going to roll up a half a dozen of those. I'm going to roll up a half a dozen of those where I feel like culturally there's a fit, strategically there's a fit. We don't totally overlap, so we just end up, stealing from each other's sort of businesses, but it's additive. There might be some layer or percentage of that business that is a head-to-head competition, but if there's a good percentage that is not, I'll just give myself as an example. It was early 2000, and the web was very early, and we were standing up a web hosting company. So we were selling domain names, we were selling web hosting, we were selling email, we were doing it as a service. It wasn't called those things back then, but we got an infusion of capital. We could have just continued to build, or we could have rolled up all these little companies around the country that we knew if we could roll them up all at once and get volume and scale, we could start introducing new products to those existing customers and get growth rates faster than if we were trying to do it in a pure acquisition mode. And the CAC back then was $1. I mean, it was a very different time. So very different time. But what we did was we went out and we rolled up 18 small little hosting companies to give us the scale and volume, the number of customers we needed. The data centers were already built out. And unfortunately, tech wasn't as advanced as it is now, where we could start to do very quick integration. And, even having a server that was partitioned across 100 different small businesses. Security back then was very different. So I'm giving that as an example that we could have gone for pure acquisition growth, or we could have gone for, let me roll up for scale. And so in that example you just gave, maybe roll up for scale is one of those options. The second option I would say is partnerships are an untapped opportunity for you to go and strike up partnerships with companies who may have relationships with other customers you may want to get to. And it's a great way for you to get access to those customers in a strong alliance type of relationship, which is another chapter in Growth IQ called partnerships. And then there's one called co-opetition, which is maybe working with a company that you may view as slightly competitive, but you want to cooperate because going after joint customers with a joint solution is better for that customer. And in the end, you'll be better for it. So those are a couple examples, right? You can do the roll up. You can do partnerships, you can do co-opetition, trying to acquire more customers in a more cost-effective manner, especially if you're small and you don't have a big budget. Partnerships may be the way for you to go.
Love, very concrete, great ideas. And by the way, the growth through acquisition, I've been hearing it a lot recently. Vern had a summit last week, online summit, talking about precisely that. And it's the trend because you had all these startups. A lot of them, they were used to get funding and funding and funding. Now they will not be able to get funding based on the new capital requirements, and they're going to have to start merging and be profitable and be acquired. So it's part of the trends of the game.
Yeah, and I would say, look, you can do M&A can be an amazing way for you to get additional capital, talent, capabilities, and customers. But you can get crushed underneath an acquisition if you don't have sort of the muscle mindset to do that. So if you are going to go down that path, this is one where I say, get an advisor, right? Bring somebody in who's done it and done it successfully so that you make sure the due diligence you're doing on the company you're looking to acquire considers culture, talent, people sort of, and the operating model that they have, because it just doesn't work if you have a culture that's like, go, 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 growth at all costs. And then you acquire somebody who is much more profit oriented. Those two things are create tension in an organization. So you want to make sure that you have somebody who knows what they're doing.